there's going to be a huge shift when it comes to the precious metal space. I think I do finally feel like the currencies are starting to lose some of their traction. Cryptos are starting to come in. There's so much printing going on. I think gold, silver have got potential to really take hold and actually become something again and just go absolutely ballistic. Right. The crash should cleanse everything, and then it gives us an opportunity to pick up dirt cheap stocks and companies and opportunities.
So at that point, after the crash, do you see FOMO coming in like never before? I mean, we've seen FOMO in GameStop, AMC, Dogecoin, Nvidia. Do you expect FOMO to come in to gold, silver miners on post the crash?
No, not really. The only FOMO will be people like us who know the space and we know the opportunity in front of us will be like, I got to get in, I got to get a bunch, right? But believe it or not, after a financial crisis and a huge correction, people are shell shocked. They hate the markets. They can't believe how much they lost. They don't want anything to do with it for years. And people are still tortured from the 2008 crisis and the real estate crash. They still have those pains. So believe it or not, even though we will be drooling going, oh my gosh, this is it, guys. Like, and we might have FOMO of like, I want to make sure I get every little penny gold stock that's like primed and ready to go nuts. Everyone else is like, I'm done. I hate this. I can't believe how much I lost. I can't afford it. And they're going to generally be in a bad financial state, right? They're going to have probably no job or their business is struggling or, it's not a very positive situation. So you always have to, sell when everybody yells and buy when they cry. It's tough to do, but and these major cycles take a long time to unfold.
Yeah. So are you seeing currently big money, institutional money starting to flow into gold at this point? Or do you expect that to come post crash?
I mean, I don't really follow the money flow too much for gold. I mean, we're seeing a lot of countries, central banks accumulating it, which to me is a big red flag that who knows, they want a real currency. They don't believe in their own.
Something,
So
yeah.
there's
Something's coming.
definitely big concerns, right? Everybody wants to go to digital, the US dollar to digital, everybody's tracked. Um, uh, I do. I think big smart money is accumulating gold and they're not looking to let go of it. And it's going to be difficult to get. And we're probably going to get into one of those phases where people aren't going to be able to buy gold and silver. Like you're going to pay this ridiculous over spot price and they'll be like, oh yeah, we'll ship it to you in like 6 months when we get it. But it's more like
Right.
if we get it.
Yeah.
So, and that I can't wait for that to happen. That's why it's so nice to have physical, just because to have it in your hand and know no one else can get it and the price is going up. I mean, that is like true value.
Yeah. All right. So hey, let's dive a little deeper into silver and the miners real quick here. Can we look at the large base in silver that's formed since 2020? There's an old adage on Wall Street: the longer the base, the higher in space. What is the large base in silver pointing to?
Yeah, so silver, if we you can see the monthly chart here, if we were to use some Fibonacci extension, we can draw the levels from the rallies we've seen over the past couple of years. Believe it or not, because it's pulled back so much, especially in 2022, it really kills a lot of the upside potential. Now, here's the wild card: is silver is not very easy to trade. It is super unpredictable. It doesn't chart very well, believe it or not. I find it's a lot more random, although it may not look like that to some, but it actually is a very difficult commodity to trade. It really is just showing potentially we move up to $33 a share based on this chart pattern. This is the shorter term chart pattern. We can go and look at a longer term one, which is the low that we saw back over here in 2000. We can go back to the high and pull this back down to the low. And this will give us the big picture of where silver should go, which brings up to about $59 an ounce as potentially the next major run, which would be pretty sweet because it'd be nice to blow past the $50 mark and have that run. So there's a lot of upside potential, but silver goes ballistic. Silver, once the feeding frenzy and the stockpiling of silver kicks in, we can see what happens here. It just literally goes like a rocket ship straight up. And so it'll blow past targets I honestly see silver more like in the 80s, like 120, $140 potentially. So there's tons of potential. I like silver from that regard. It is building a base. It's more unpredictable. It pulled back 65% during the 2008 financial crisis over here. So it has a lot of downside. You have to be able to stomach that
Mhm.
if you're to get in,
That is
because
true.
it's painful to watch it go down. And yeah, so I think that's what people just need to be aware of. Is silver and miners are really volatile. They are, to me, just a speculative leverage play on gold. And if you're playing the speculative side, you better be ready to ride that roller coaster, because either ride it or trade it. But but these, believe it or not, gold miners and silver are very difficult to trade. I've covered this a few times with subscribers. We talk about it in detail. Is sometimes gold miners and silver miners will rally with gold, and then other times gold will see the stock market sell off. Let me rephrase that. Sorry. Gold and silver miners will rally with the stock market sometimes. And then other times the stock market sells off, and then gold and silver miners rally and just take off. But we never know when they disconnect. And so timing the stock market is difficult enough. And then when you try to trade miners and silver, that can break off from the norm at any given time, and you never know when they're going to disconnect, adds a whole new wild card. You go from like a 50-50 almost to like a 35% chance of making money on those trades. And they're really volatile and they drag out. So a lot of people don't realize that when you get into the miner space, you have a super low chance of making money. Most people end up buying miners. They hold on to them forever. And hope and pray for another super cycle to pull the weight and get them back up, 500% to their break even point, and then hopefully go higher. So, the precious metal space is super difficult if you're an active trader, because it's just the way they move and how they're disconnected or connected. You never know when to the rest of the markets.
So your $100 to $140 silver call here, you're seeing that after the reset and after gold has established momentum, or when do you see that?
Yeah, that would be after the stock market has a big correction. Fed's been lowering rates, firing off their quarter rate basis points for months on end. Market prices are falling. Businesses are unemployment's going up. Businesses are struggling. Earnings are going down. Wallets have closed from individuals. We need that financial reset. And then when that turns up, that's when I think we'll see silver, gold miners have this, huge kind of once in a generation lifetime. If you can catch one, you're golden.
Yeah, golden. So on the silver chart here, do you see silver prices above $26 an ounce as being a momentum trigger for silver? That seems to some of the other analysts have been talking about $26 an ounce as being a spot that keeps getting defended.
Yeah. Yeah, you can see that if we take a look here on the daily chart. This blue line is $26. You can see it broke below it and has been somewhat stuck underneath it. It keeps getting rejected. It hit it just as you and I were speaking today, and now it's getting rejected again. So there's definitely resistance. There's definitely some selling going on. As you can see, silver over the past year and a half, 2 years here, it's a very choppy chart. I mean, you have to be if you're trying to trade it, you have to be extremely good. And the odds are really low to do well trading silver. I find it's definitely a lot of work, and you need a lot of luck. I think if we can get above 26, 27.50, I think that's where we're going to actually see things potentially start to expand. If we zoom out a little bit more, I think we could see the market potentially rally, up into these highs. This 28, 29, 30 area would be, I think, a fairly decent run. And you could argue that this might end up turning into a double top for silver, and then potentially it sells off, with the rest of the market at some time later this year and resets, and then starts to head higher, which isn't a bad thing. If we zoom out on this chart, a pullback from that level, we eventually see it pull back. All it's doing is just building this great big rounding base. And when it breaks out of this base, as you said, the bigger the base, the higher the space. I mean, it's got potential for this huge, huge rally. to the upside. So it's really trading within this major top that we saw back in 2011. It's trading underneath that, but building a huge rounded formation to blast out of.
Mm-hmm. So I don't know if you do analysis on the gold to silver ratio, but it has a historical mean close to 50. It's currently around 90. Some people are suggesting that the historical mean no longer is valid and that ratio is broken. Others are saying that there will be a reversion to the mean. Do you have a position on that?
Not really. I mean, I've a lot of people talk about it. It's just a ratio. I don't look too much into it. Again, I follow the price, but obviously, yeah, silver seems to be pretty undervalued. It should play catch up, and pretty much silver always does from a percentage standpoint. It might underperform right now, but give it time, it'll be crushing gold later, probably in terms of percentage return, right? So
It'll run further faster at some point, right?
yeah.
Yeah. So at current gold prices, gold miners should be booking some pretty solid profits, you would think, that should get noticed when first quarter financial results start coming out. Chris, do you expect to see the miners starting to move at least pre crash here on these financial results?
I do. I think they're primed and ready for another decent leg up. I think the GDX chart, which let me just pull this up and show you. If we look at GDX as just a gauge, keep in mind GDX, GDXJ, SIL, SILJ, all the silver and gold miners, I look at them all as the same trade. They generally always move together, just some move percentage-wise more than others. Now, if we zoom in on the daily chart here of GDX, we've got a very nice chart pattern that's unfolding. So we've got this previous high right here on GDX, and then we've got this other previous high right here. And long story short, if you have a strong momentum move, so a big rally in price that can break through two resistance areas, I mean, there's enough power to smash through and eat up all the overhead supply, break through two ceilings. Usually after that, the first pause or pullback is an opportunity to get long, and you should see the second half of that move go higher. And that's exactly what we've seen. We saw it bust through those levels on some very strong buying volume. It faded back down to the 20-day moving average, kind of tested this level, and then we saw a big reversal the other day. And I think there's potential for miners to rally, and we can gauge where this momentum is. The momentum, the upside here potential is $32 is the first stop, which could really be in a couple of days from you and I talking, all the way up to about $33.70 or $34 a share. And so percentage wise, from where that is currently, we're looking at about a 6 to 12% rally. So there's some upside potential. Do I think it's going to go a whole lot higher? I think it might run out of steam there, but that's what the short-term chart right now is pointing to. If it gets traction and continues, there's a 12% from where it is right now going forward.
And so you expect that 12% max through the stalling of the market?
No, I think the stock market will keep going. I think the stock market wants to push higher, but even if the stock market stalls and starts to go sideways for several weeks, or even if the stock market starts to roll over and go down a little bit, gold, silver, and miners, this is when they should be shining, and they are coming to life right now. They could keep moving up no matter what the stock market does. If the market goes up, they could go up. If the stock market goes down, these things I think are going to be disconnected, and they're going to keep going up as that defensive play. So, and this is what we see just before the stock market and the economy top out. That's the big red flag, is we're in this little window. There's some upside potential in metals, but just a little bit of upside before the market has a correction.
So over the last 50 years, there's been different size bull runs for gold, right? So there's been, like in 2015 and 2020, there was kind of a mini bull run. In the 70s and early 2000s, there was really large bull runs. So leading up to the market rolling over, you see a smaller bull run a la 2015 maybe, and then it'll come back down. And then post crash, you're expecting to see a generational bull run that could look similar to the 70s or early 2000s. Am I correct in saying that?
Yeah, I think it's potential. I think there's going to be a huge shift when it comes to the precious metal space. I think I do finally feel like their currencies are starting to lose some of their traction. Cryptos are starting to come in. There's so much printing going on. I think gold, silver have got potential to really take hold and actually become something again and just go absolutely ballistic. Whether there's going to be a currency backed by, metals or whatever, who knows? But I think there's going to be some type of catalyst, and we're going to see precious metals become very precious, and everybody's going to want them, and they're going to be expensive. And I've heard some other stories recently where they're talking about how there's going to be like, mining in outer space. There's tons of gold out there, and gold won't be precious here because there's so much out there. But in my head, I'm like, well, fuel cost is already expensive to get it out of the ground. How
Right.
about a spaceship to space, mine it, bring
Right.
it back? Like, I think some of these people are out to lunch. They're like, I'd rather just own Bitcoin because gold's going to be everywhere because we're going to bring it in from outer space. I'm like,
Right.
brainwashed by Bitcoin, some people.
Right. All right. So, we've talked a lot about the Fed easing monetary conditions and reaccelerating inflation. If easing monetary conditions with inflation reacceleration is the next move, is really the move we're in now, then is this the most compelling setup to own hard assets that you've seen?
It always feels like you could argue it's the best time to hold good, solid assets. I mean, it always feels like a good time to hold gold. I do think I think right now is a good time. I don't think gold is going to go much lower from where it is. I think it's going to rally up a bit. Stock market has a correction. Gold pulls back, maybe just to this price again. So I think going forward, gold is a solid buy. I like it because it moves slowly. It's comfortable. It's stable. It's not a speculative play, really. The whole world accumulates it and wants it. The government wants it. Like, everything is going for it. Um,
How do
yeah,
you feel about
I
some
just
of the
really
other
like it.
hard assets? I mean, we've seen copper moving up. We've seen some inflation reacceleration in some of the other hard assets as well.
Yeah, yeah. I mean, I don't get too much into the other commodities so much. I like other hard assets. I like real estate, depending on what you consider hard assets. But I don't think now's the time for real estate. I think it's going to be a beautiful opportunity in a couple of years. But I keep a pretty narrow focus on my investments. I stick with everything that I know. I live and breathe. I understand, which is real estate, stock markets, bonds, currency, gold, silver, and actively managing and identifying trends and opportunities. So I don't go outside the realm too much. I mean, I really don't ever cover Bitcoin, only when people want me to. And I know there's huge opportunity in Bitcoin, and everybody's like, you're missing out. I'm like, well, I probably am, but something that moves 15 to 20% a day and things are getting hacked all the time. To me, it's not in my comfort zone. It's just not my thing. Right. So I stick with a very narrow set. I like gold, silver, stocks, real estate.
Understood. Yeah. So I wanted to ask you one question on the consumer. According to a Fred database chart indexed to 2007, personal interest payments now exceed wages and substantially for the first time. Are you worried about that in any way? Is that alarming to you?
I didn't know that, but yeah, that is super alarming. That's not good. Yeah, it's just a matter of time, I think, before the house of cards fall down. And yeah, there's gonna be a reset. Like, things are just out of whack, and things are so expensive. I mean, I have a lot of individual friends who are well off, and they're like, even them, they're just logically just like, it's too expensive to go. It's just a waste of money. We can make a beautiful dinner here. Let's go out and
Right.
get what we want, right?
Right.
And it really is. If the well off are going, this is ridiculous, these pricing to go $500 for a dinner, you're like, something's wrong. Something's going to break, and it's just a matter of time, right?
Everyone's feeling it. I mean, I ask these questions to people of every walk of life wherever I go, and everybody is feeling it, no matter
Yeah.
what walk of life they are. Yeah.
No, totally, totally. So we're definitely in nosebleed territory, and it can't keep up like this because the majority of people cannot afford it, and that means things are going to weaken eventually.
So before we wrap up here and I ask Chris our final question, I want to point everyone over to our Substack. It is free. Go to metalsandminers.substack.com. We post free content on the consumer, the economy, markets, artificial intelligence, individual metals and miners, and all the individual interviews that we conduct also end up there. And when you subscribe, we want to give you a free gift. It's a report that we wrote. It's based on the important Ray Dalio principle that is titled, "If you don't own gold, you know neither history nor economics." This is a free gift, and it's a must read for everyone on why we all need to own gold. So head over to metals&miners.substack.com, put in your email address to subscribe, and receive this free gift on us. Also, Metals and Miners is a new channel. It's less than 2 months old. Please comment below. Tell us what information you want to hear about so we can better tailor our expert interviews to your needs, or just tell us how we're doing. If you've enjoyed this conversation with Chris as much as I have, please let him know. Hit the like button, the subscribe button, and please leave a comment down below. Chris, in wrapping up our discussion, I've got a two-part final question for you. With the market and economy backdrop, as we've discussed, what asset classes are you staying away from right now? What asset classes are you moving into or are already in? And would you share about your consistent growth strategy that generates reliable above average returns with a fraction of the portfolio volatility with the audience?
Sure. All right. A few questions there. So long story short, we are long the stock market. No matter how bearish I am, we follow price. So we are long the stock market. We've been long since November. We will be eventually rotating into a different asset class out of equities when they fall out of favor. So this, and that could be the long-term treasury bond ETF like TLT. It could be UUP, which is the US dollar index. So we'll move to a different asset class. And to touch on your question about what asset revesting is and how do we only hold assets that are always going up, that's because I see the markets invest very differently than everyone else. You generally are doing one or both of these strategies. You're either doing the buy and hold, which is nothing, highly volatile. You never retire early with the buy and hold. You got to put in decades. And then you've got the active trader who generally over time loses money or never really fully grows their account. What I do with asset revesting is we just rotate, reinvest our capital into a different asset, whichever one asset it is that's performing and trending in the direction we want. So for example, well, let me put it this way. The stock market is like the ocean. Think if you're walking down the beach, you see a surfer out past the break, they're just floating out there. What are they doing? They're waiting for a set of waves to roll in, a clean set. And that's what I do. We sit on the sidelines, we earn interest. When we see an asset class rolling through with strong momentum and it fits our criteria, we jump on it, we invest with that trend, we let it ride. And then the nice thing about something strong is when it starts to get weak, we can identify that and we can start trimming off profits, moving our stops up, start looking for what the next wave will be. And so that's what we do. We move into one asset at a time. And when I say that, this is pretty extreme for most people to wrap their heads around, which is, most people say, oh, I have a whole bunch of stocks. I own a bunch of sector ETFs. I'm diversified. I am good. I got blue chips. I got small caps. To me, it doesn't matter how many you own. It's all the same trade. It's equities. When the equities markets go down, when the tide goes down, all boats go down. It's the same with the equities markets. I don't care if you own every 7,000, 8,000 stocks out there. They're pretty much all going down. It doesn't matter how diversified you are. So if that asset is going down, we just close out our ETF position, which could be SPY, QQQ, and we go and we move it over into US dollar index. And we can just ride that slow thing higher while the stock market's correcting. And so that's what we do. We revest our capital into different assets one at a time. And typically as the markets get more wild, we move down our asset hierarchy to slower and slower assets. So as things get wilder, we're moving to things that are more comfortable, slower moving, more conservative and consistent. And it's a very, very calming effect knowing we ride the markets up and then we can still squeeze money out while it's falling apart. And during a stage 4 decline, we actually trade inverse ETFs. So we actually profit from falling stock prices, but it's a very small window that we do that in the markets.
Yeah, I really appreciate you sharing that. And everyone, I want to encourage you to go check out his book, Asset Revesting, go to his website. Chris, thank you for being so generous with your time, your analysis, your ideas, and for coming on to the Metals and Miners podcast. Can you tell everybody where they can learn more about your work and how they can connect with you?
Sure. Yeah. They can visit thetechnicaltraders.com or go to Amazon or any bookstore. I have a book called Asset Revesting. and it'll walk you through kind of my views, how we attack the markets, our hierarchy, what we look to invest in. We only use ETFs. We keep it really simple, one position at a time. And yeah, it's just you can go either of those.
Everybody, go check out Chris. Chris, thank you so much. We really appreciate your time and for coming on. Thank you.
Thanks.